Welcome to the CFA Level 1 practice test. Domain, Equity Investments. Part 6. An analyst evaluates a research study on market efficiency. What adjustment ensures proper testing of the hypothesis? A. The strategy must be shown to produce positive returns in the period immediately preceding the public announcement. B. The researcher must demonstrate that the information used was not available to the general public at the time of trade. C. The returns must be risk-adjusted and exceed the costs associated with implementing the trading strategy. D. None of the above. Answer is C. The returns must be risk-adjusted and exceed the costs associated with implementing the trading strategy. What bias best describes holding losing stocks too long and selling winners too soon? A. Loss aversion. B. Confirmation bias. C. Overconfidence bias. D. None of the above. Answer is A. Loss aversion. Wide bid-ask spreads and large price moves indicate deficiency in which market characteristic? A. Complete markets ensuring full instrument range. B. Operationally efficient markets with low trading costs. C. Informationally efficient prices reflecting fundamental values. D. Not applicable. Answer is B. Operationally efficient markets with low trading costs. What is a foundational assumption for applying any dividend discount model, DDM? A. Discount rate exceeds growth rate. B. Company will distribute cash to shareholders. C. Dividend growth remains constant indefinitely. D. None of the above. Answer is B. Company will distribute cash to shareholders. If initial margin is 40% and stock rises 12%, what is the investor's equity return? A. 12%. B. 25%. C. 30%. D. All of the above. Answer is C. 30%. A pilot project's success gives the option to invest fully. What type of option is this? A. Timing option. B. Growth option. C. Abandonment option. D. Not applicable. Answer is B. Growth option. For a mature dividend-paying company, what factor is most critical to investors' market value expectations? A. Most recent ROE and management's ability to increase book value. B. Historical average capital gains and standard deviation of past returns. C. Prospective amount, timing, and uncertainty of future dividend distributions. D. None of the above. Answer is C. Prospective amount, timing, and uncertainty of future dividend distributions. If country-wise currency depreciates against USD and local equity price stays same, what happens to U.S. investors' USD returns? A. Decrease. B. Increase. C. Remain unchanged. D. Not applicable. Answer is A. Decrease. In sensitivity analysis for equity valuation, which inputs should an analyst focus on? A. Inputs with low historical volatility. B. Inputs from audited financial statements. C. Inputs highly uncertain or significantly impacting valuation. D. None of the above. Answer is C. Inputs highly uncertain or significantly impacting valuation. Why does debt financing in an LBO most likely provide a tax advantage compared to equity financing? A. Tax deductibility of interest. B. Tax-exempt status of dividend payments. C. Tax deductibility of debt principal repayments. D. None of the above. Answer is A. Tax deductibility of interest. Thank you for watching. For more learning videos and tutorials, subscribe to BISP Trainings.